Seller Finance Solutions. Proven, time-tested strategies to help you reach your real estate goals. Brought to you by Noteworld Servicing Center. Seller financing can be a great tool to help get a house sold without having to drastically reduce the selling price or having the house sit for months and months while you wait for that right buyer just to somehow come along and find your property. By recognizing that the subprime mess has caused lenders to toughen their credit policies, leaving millions of people who don't have that 20% down payment or 720 FICO score, they can't get traditional financing anymore. And the resourceful property sellers and their real estate agents are getting creative and tapping into this huge pool of potential buyers to get their houses sold quickly and at top dollar, even in the slowest markets that we've seen in decades. Clearly, seller financing is a win-win tool. Most sellers have never considered this type of financing because honestly, they're either not aware of the benefits or they really don't fully understand how this type of transaction works. So let's take a closer look at some of the advantages of seller financing. Real estate is a numbers game, and seller financing is a very powerful tool to generate more interest in your property when the market is slow or when there's a ton of similar houses available, like we're seeing in today's marketplace. Just the one simple act of listing the house as OWC or owner will carry, rent to own, will make the house stand out and attract more potential buyers, sometimes as much as 10 times more. This happens because many individuals just don't meet the stringent qualifications needed for funding from a bank. And offering your own financing program will open the doors to these prospective buyers, essentially significantly increasing the number of potential buyers that are looking at your property. So in our real estate numbers game, seller financing offers more buyers. Seller financing also brings the property sellers another critical number: the likelihood of selling for a higher price. Offering seller financing will not only greatly increase the number of potential buyers, but also bring a unique demographic of buyers who are willing to pay a little bit more for a given property than buyers who can qualify for conventional funding. They understand that because they don't qualify conventionally, they may have to pay a little bit more, but they're very, very motivated to get into the property. So our second number in the numbers game is more money. Additionally, when the property seller finances to the buyer, so when the property owner seller finances to the buyer, they get to act as the bank. That means they can structure the deal to meet their needs and receive the financial benefits of above average returns on their equity. Sometimes better returns than they would ever get investing in the stock market or other semi-secured instruments. Over time, if the seller holds on to their seller finance note, this can add up to tens of thousands of dollars in additional cash flow. So by playing this seller finance game, really we get to see the numbers can have a significant long-term profit potential, more long-term profit. Even when these benefits to sellers are made clear, many sellers are still hesitant to offer this type of financing because they're entering unfamiliar territory. I mean, it's natural, right? It's a human response. Everyone is uncomfortable with new things, especially when it's typically the largest asset that they've ever dealt with, their home. For many property sellers, considering seller financing when they've only dealt with traditional cash buyers is definitely thinking way outside the box. But once sellers understand the process, they are likely to be open to a seller finance transaction or a seller finance offer instead of the really unattractive option of either cutting the listing price or waiting indefinitely for the right buyer, or worse, having both of those things have to happen. A seller finance real estate sale is simply a real estate transaction where the seller helps to finance the purchase by foregoing a big lump sum payment for their equity, and instead they negotiate for some form of payment of that equity out over time. The seller sets the sales price, determines and accepts a down payment, and then finances the remaining balance. The final step is the part that may scare some sellers, but it actually can be very simple. Here's an example. If the sale price of a house is $200,000 and the buyers come in with 10% down, they can't quite get that 20%, but they do have 10%, that gets them a down payment of $20,000. And because this is a seller finance transaction, the interest rate is going to be set at 9%, a bit higher than what conventional rates are right now, but if the buyer could get a conventional loan, they would. They can't, so there's a little bit of value in there for the sellers. So that would get a payment of $1,448.32 for the buyer. But this agreement calls for a balloon payment of the unpaid principal balance at the end of 7 years. Most seller finance transactions are not going to be out there for 30 years. There's going to be some type of payment, prepayment, or balloon payment that's going to be due in a relatively short period of time. 3, 5, 7 years, somewhere along there. In this example, let's look at what we were talking about with the more long-term profit. The time value of money in this transaction, the seller received $20,000 as a down payment. They received 84 monthly payments of $1,448.32. So the total payments that they received was $121,658.88. The balance of the balloon, or the balance of the principal due after 7 years, is $168,552.82. So the total gross proceeds on the sale of a $200,000 house is $310,211.70 in only 7 years. That is unbelievable long-term profit. One caveat. Don't try to create a seller finance package on your own. Hire competent professionals to draft up the legal documents, to negotiate the terms of the agreement, to set up title insurance, to handle the closing, to record all the necessary paperwork, and contract with a third-party servicer to handle all the tax reporting, accounting, and long-term escrow services. And that's what Noteworld does. We take these seller finance transactions and we turn them into what people would think is a conventional transaction. You have online access to your account 24/7, 365 days a year. You will have the ability to go on and make online payments or payments by phone. We will handle all the tax reporting and make sure all the principal and interest is calculated correctly. So make sure you get the professionals involved to ensure that the transaction ends up being a great transaction for everybody. Noteworld Servicing Center has been in business for the last 30 years, is the nation's largest servicer of seller finance loans. We were recently purchased by President and CEO Linda Remsburg. Now we're a privately owned company committed to outstanding customer service and offering the best products and services to meet our customers' needs. To get even more valuable advice from Noteworld, visit our corporate website at www.noteworld.com or bookmark our YouTube channel, the one that you're on right now. Thanks and have a great day, and look for some seller finance transactions.